I don't have any sound. Instagram, what is up? Oh, there we go. Sound. There we go. Instagram, what is up? Oh, there we go. Sound. There we go. Instagram, what is up? Oh, there we go. Sound. There we go. Sounds horrible to me. You guys can hear me on YouTube? What's up, Jordan? Let me know if you can hear me, man. It sounds fucked up on my end. Let's check out what stocks are moving higher, what stocks are moving up, if you're even looking at that. Can you hear what stocks are moving up? Well, that's what we're going to try to look at. On Instagram, you can switch over to YouTube, or I'm going to switch over to my subscription feed. I don't like the bots at all. He says you can hear me, but I don't want it to hear me. I'd like it to be decent sound, man. All right, Instagram. Peace. I'm going to switch over to my other feed. Discard video. So what we're looking at here, let me change the audience, is utility stocks, man. They're breaking out right now, or trying to. The pressure of the, if it, well, let's pull this up. Sounds good. All right, Vinny. Thank you, sir. What we see is a money flow pattern here with utilities, and they're up today, and we got long. Let's see. Let's take that back over there. Was it yesterday? So if you go to thepetersreport.com, on page 4, I usually put what I'm doing. Oh, well, not updated it yet. No, haven't updated. So yesterday, or was it the day before, we started adding to UTSL. You could see this forming. The stage 1 really kicks in. You know, at first I didn't like this because it didn't really get extreme. It didn't come down like we want, you know. Doesn't mean it's not a good play, but I really like to see it extreme, you know. I want to see it hit these levels, at least get near it. Then your bounce is usually better. And now, not if it's like a runaway now. If it's a super strong bull market or the other way around, a bear market, then, you know, that may be all you get. But, you know, it's a solid support level before, right? It's one of the rules of money flow. Price has memory. And then if we come across even more, it had been a place that it stopped before, right? Honored it, ran up, came down, and honored it. So you see price honoring where it stopped before, and that's how you get support and resistance levels, just based on that philosophy that price has memory, that price can, price can see these zones, and for whatever reason, people buy it up there. Now, what we're seeing come together is the turning point of the trend change. Hasn't quite happened yet. Could you have a fake signal? For sure. But this is a breakout signal underway. It's when price first makes its move above that green line, going against the general direction of it. So you see here the general direction of it was sloping down, and now price making its move above it. And you see it ran, and then it ran. Well, same thing to the downside now. Now it's headed down, but it has stopped at a previous level. Now, basically, you're on a teeter-totter here, right? You could look at this and go, okay, well, that's a higher high, and price is headed down. Maybe. And it might. I don't know. I don't have any way of predicting. I know what it looks like when it breaks out. And when it breaks out above the green line, okay? It breaks above it after it's been coming down. And that's the pattern of a breakout, right? Coming down and then starts to move. Now, that was a fake one there. See it? Then it moved down again. What? It held that level 1 zone, came back up. Second run at it. That's super bullish, man. Runs up. Where does it stop? Where it stopped before, right? Isn't that the pattern? So as we look at the pattern, that's how you'll see price move. Let's pull it up. Can't talk about stocks without looking at the pattern, man. So that's the pattern in which they're going to move. And it's not predictive in nature, man. I know everybody like to think to know where stocks are going. I don't know. I just play what they hand me. And this is what they're handing us. So it's in one of 4 stages. That's where it's at. And, the real estate market you have is the one they gave you. And that's the one you play, the one you're given. You make what you make. You live where you live. So we have to play the hand we've been dealt. I did a video today earlier, a reel on one way to not get to anything is not have anywhere to go. In other words, don't have any goals and you're going to get what you got. Nothing. Like you're just going to keep getting that. So one of your goals with charts is like you should be able to look at a chart and say, okay, what stage am I in? Like that should be a goal. I don't know how you would get good at trading if that's not a goal. Like on any level, any time frame, you should be able to look at it and say, okay, well, it broke out over here and it ran up and then it put in a box and then it came over. So then as you start taking that information, that becomes super easy to you. It's just how you think. It's how you look at price. You look at price. Now you can begin to set specific goals for yourself, or you can create a strategy around the big picture of how you're seeing things. But you can't do something you can't see. And you can't, and if you've ever heard me talk about this, the success formula is to be a good trader, you got to be a trader. It's not a series of actions. But because you're a trader, you're going to execute a series of actions. If you just go about trying to execute actions without actually being the thing first, then you've got the success formula wrong. And that's one reason people tend to fail is they're trying to do things instead of being. Right? So the best way to be a real estate investor is to be a real estate investor. Meaning read things real estate investors read, act like they act, do what they do. Right? What kind of things do they look at? What kind of things do they read? What kind of things do they watch? What kind of channels would they subscribe to? What kind of books would they read? You start to become the thing that you are. If you were a farmer, you would have particular types of clothing. You would have certain kinds of tools. You'd probably drive a certain kind of truck. You would have a certain relationship with weather. You would probably have apps and be looking at things that people that aren't farmers don't really give a fuck about, right? Why? Because he has to be that thing, Now, typically, the way a lot of people like to learn is just fumble through a bunch of shit, trying this and trying that, instead of ever becoming the thing they're trying to be, So be a good trader today, like right now. If you're going to trade, be a trader today. Like what happened yesterday doesn't fucking matter, really. It's you today. What are you doing today? So if I'm looking at this, now, how to know that you're a trader out of whack? You go, but Gerald. And then anything else that follows means you have a scattered mind. So if I'm trading this, and this is something I trade, and this starts to break above the 20-day, and that's a signal for me inside of my strategy that this is breaking out. This is breaking out of the box. It's breaking above the 20. The 5's about to cross, and I have a target right here, okay? Now, I could add shit in here. You could say, yeah, man, but CNBC, or man, I got this buddy. Like anything you put there, you now have a scatter. You don't have a strategy anymore. And if you're a trader, if we're trading, and this is something that I'm trading. So if I'm trading it, where would I call the trade? Like, where are we going to bust out at? Well, if we're short-term trading it, right around in here somewhere, right? And maybe we do a 2-layered one. And you're like, well, I don't like to lose. It didn't ask you that. Like, trading doesn't ask you, do you like this? Does it feel good? Would you like it to be easy? It doesn't do that. It doesn't give a fuck about you. This price, this stock doesn't care about you or your family or what you're doing on Friday. It doesn't care at all. It's going to be here on Friday, whether you're here or not. Think about that, man. Meaning Bitcoin shows up every day. You might not. Oil shows up every day. There's somebody that hits the button. You might not. But it does, right? What happens if you do, though? What happens if you do? So that's what we see here breaking out. This is one that I trade all the time. So I would have to take this one, even though the market's coming down, right? Well, the reason we want to follow different things in different sectors is not everything is coming down. Like a lot of things are down today, but not everything's down. Utility stocks are up today. They're actually breaking out. What else? Where's Exxon? Let's check Exxon for a second. Now, before we get off on that, this is the XLU. XLU got a sloping down 20-day moving average, sloping down. What is the direction of that 20? Sloping down. Now, if you remember over here, it was sloping down, and it started to break, then came down, then came back. Right? Well, what happens to the trader over here? You're going to get stopped out. But then it comes back in. You're like, well, I don't like that feeling. Well, it doesn't give a fuck. That's trading. Trading is if you were in this and this was your stop zone somewhere in here, then you would have been stopped out, and then it comes right back in, and you got to be able to execute without a lot of crying about it. Like execute. If that was the plan, then you execute on the plan, and that is trading. That's trading. So you get up every day, entry, exit, target, stop. When that's hit, I'm out. When it gets back in, I'm in. And it doesn't care about the last trade. Or that's you. You're adding all that input. You're adding your feelings in it. You're adding what so-and-so said. You're adding who the president is. You're adding all these things. And other people are adding it too. And they're interpreting the data. And then you can have it go, oh shit, next day, woohoo. And people are like, well, this doesn't make sense. I know. Never did. Let me let you in on something. Before you got here, it didn't make sense. Before you got here, it'd go up and down, bust and boom. Everything is the same. And everybody likes to think there's something fucking different. Now they're here. No, it's the same. And when you're gone, it'll be the same. And you can take great comfort in that. It's not going to break with you. So the stock market didn't break when you came in. And it's going to keep going. And then you'll be 35, 40, and there'll be a whole bunch of new 20-year-old dipshits coming in who don't know anything, just willy-nilly running shit up. You know, there'll be a whole new, it's constantly we're replanting them constantly. And then as you're the old person, you're now the wise person, and you have a choice. You're going to have $1 million, $2 million, or not. You can take your mind off of this and then not. You just don't have it because you go do something else. That's how it happens, man. How do you get to 60 and don't have $2 million? You didn't think about it at 30. And 35 and 40 and 45 and 50 and 55. And then now you're like 60. You're like, oh, fuck. Right. So when the guy says to me, Gerald, I got 200,000, what should I invest in? What you did yesterday, dude. That's what you should do. In other words, be about it every day, man. You got to be at first. You're trying to do something that you're not. The reason you have 200 is you're not an investor. You need to be an investor first. Or become a trader first, then trade, right? Which means what? Maybe there's a backup step, man. Maybe there's a moment. Maybe there's a little bit you need to do first. Maybe there's some social adjustment. Most of you need counseling, to be honest. You really need to go to a counselor. That would probably help a lot of you if you went to counseling. So let's see. Anchor point still intact. Everyone that sent me, I told you the bottom wasn't in. I just blocked them. Yeah, I blocked like 6 people today. I told you the bottom wasn't in. Block. You're too stupid to talk to. See, now you got blocked. How unfortunate. You could have been looking at utility stocks with me today. Instead, you got blocked. So, there's a lot of markets going on right now. Right? Utilities are wanting to push up. Let's look at Exxon. Exxon's at all-time high prices. I thought stocks were going down. This one's not going down. This one ain't going down at all. So these stocks didn't go down. Right? Do you want to buy them now? This is a big lesson for everyone, man. This is a big lesson. You need to repeat it, man. Do you buy oil stocks now? I mean, they're doing pretty good. Look how good they're doing. No, that's not when you wanted to buy them, right? Now, Buffett's been buying them, but I did all my buying way back. You want to do all your buying when shit's low. Like down here. And any of them, right? That one. I mean, if we're just going down the chart, ideally, don't we want to do all our buying at bottoms? I mean, just as a general rule. Doesn't that seem smarter than doing it now? Well, somebody's buying it now. This is the weekly chart of oil. So look at the RSI. Now, when's the last time that happened? I mean, look over here, man. Now, when you look at that top, does anything look familiar about what you're looking at there? Sideways, down. Now, this is on a weekly, though. So we're probably putting in a 3 up here. I don't know how far we go. I still got a bunch of money in oil stocks. It's a little bit of a conundrum. A lot of smart people are still buying oil stocks. RSI is extreme. That's on a monthly. Take it down to a weekly. It's basically extreme. That's on a monthly. Take it down to a daily. And yeah, we just came off extremes. So it's hard for me to get excited about these here. Lockheed Martin looks like I thought the stock market's going down. This looks like it's breaking out. This Lockheed Martin looks like it's trying to, right? All-time high is 470. So we see that stock hanging around. Look at that support. It's setting up. But if we look at the XLU, which is what we came here to look at, this one, you need to learn about the XLU. The XLU is the Utilities Spider ETF. Okay, it's a Spider ETF. That's a company. Utility selects sector Spider ETF. So the sector of this is the utilities. Now, let's pull up a list. This is good for you. If you don't know this, if we pull up a list of the stocks that make up this ETF, we got a Wealth Squad favorite, NEE. I know a lot of people buying this stock. I know people on Wall Street. I know people in trading groups. A lot of people buying this stock here. Pays a 2.5% dividend yield. It's trading below the 200-day moving and sweet moving average, where price tends to get stuck, okay? Which means it gives you a sticky target up here. Morningstar says it's fairly valued. TipRanks has it undervalued. 2.5% dividend yield. Florida utility company, and it looks ready to run. And you got to ask yourself, does it respect the 20 and then go down? Does it respect the 20 and then go up? Does it respect the 20 and then go down? Does it respect the 20 and then go up? Yeah, it looks like it to me. Right? Let's see. So NEE is one of the largest holdings in the XLU. Now, I'm not trading the XLU. I'm trading the UTSL, a little dirty 3X. This 3X, don't do this if you can't handle it. This moves 3 times. It's leveraged. It's like an option that doesn't expire. That's one way I always look at them in my mind like that. So don't get stupid and put the same amount of money. Meaning if you took a $4,000 position or 100 shares, that's the equivalent of having 12,000 in the XLU. This is the UTSL. So my target, 100 shares, would be 4,000. I'm trying to get 4,800. Means I'm trying to get 20%. So as the anatomy of this trade, as we break it down, how much am I trying to make? Well, I'm not trying to be greedy. I'm looking for about $48. Previous high. Does it tend to stop where it's been before? Yeah. Right? That's where we're at. Now price is moving above the 20 and we have a target. And if we go look, oh look, the TSI has rolled over. What happens when this thing often, not all the time, but a lot of the times, what happens when this thing rolls over, man? Now, I prefer the rollover to be from extremes, meaning highs and lows. You got everything breaking out, right? Histogram says momentum is now to the upside. It's on the bullish end too, as a matter of fact. Moving averages are coming together. We got a target. This is a perfect trade setup, man. This is it. You're like, how do you trade? Right here. This is a swing trade. Now, we might differ where we put our stops. We got to define that too. You want to be a trader, right? Then be one. Where are you going to put your stop? You might use a multi-tiered stop. There's no right way, wrong way. I don't put in hard stops. I used to when I had a job. So this is support. Right around in this area, if I was swing trading it, I'd be looking to get out. Now, how do you determine your size on a trade? Well, it's $35 if it pulls back here. So you're looking at losing $500 on a $100 trade, right? Or a 100 share trade. But you're looking at making $800. Not really the best odds there. We kind of like it 2 to 1, 3 to 1. You go, what do you mean? I'd like my target to be about 2 to 3 to 1, between the 2 to 3 to 1 range of the potential loss. That way, if I have 2 or 3 losers in a row, I might catch a winner that'll solve all those problems, right? But I can't take big-ass loss if I'm trading. Now, if we're trading, that's what we're talking about here. Now, if I'm an investor, I don't give a shit about this stop stuff. But this is the zone I'm buying because I don't want to buy up here. So I either need to start buying now or probably I'm not going to get a chance to buy in it. So then I got to make a decision. Do I want more of this in my portfolio or do I want less? Well, if I want more, now's the time. If I'm not really concerned, then I just leave it be. See how trading skills made that decision easy? Now we move on. And well, guess what? Guess what? This is UTSL, but what else makes up UTSL? Southern Electric. What's it doing? Well, what about the value of some of these stocks? Now, here's the bad side to this trade. If we go look, let's look. What do they think Southern Electric is worth? You even know? Think of all the dumb things you know and you don't know this. They say it's trading at a 14% premium. Think of all the dumb things you know and you didn't know that. What else? That's Southern Electric. Pays about a 5.5% dividend yield. I've owned it for about a decade. Made a lot of money on this stock. Look at Duke. Duke is one we added in the last utility sell-off. Now it's pulling back a little. Same pattern. Now, what do they say Duke is worth? Think all the things you don't know that you do know, and you don't know what Duke is worth. You say it's overvalued. Trading at a premium. Damn. So that's the negative side of our trade here from a fundamental perspective. A lot of these stocks are already trading at a premium. You're like, what do you mean? Well, the stock market's been getting hit, right? And bonds haven't been working. So where are people parking money right now? Oil stocks, utility stocks. right? These big industrial, these they're making real shit, electricity, right? Where is I mean, look at bonds. Bonds have just been horrific. Big move up today. I'm long the TMF, but it has not been a good trade. We got a stage one, and it is buyable right now. But so is that one, and this one, and that one, and that one. So I'm not going to issue a signal to buy bonds just yet. But it is buyable. Haynes Brand's one of my favorite trades that just cannot get any love, is down 7% today. You know why, right? He says, can you briefly repeat on sizing? Right, so let's go to the XLU. Starting to turn down today. Maybe I need to stop talking. So on the XLU, 100 shares would cost you $7,200. And it's down, what, 0.28. Now the triple, 100 shares would cost you $4,050. And it's what? Up, still up. Sometimes there's a lag there. So whatever this does, the UTSL is going to do 3 times, but it doesn't actually own the stocks, right? It's a note. It's like a synthetic thing. It's some Wall Street shit. It's not a real thing. It's not a mutual fund. It's not an ETF. It's not a trust. It's an electronically traded note. Notes can go bust, so be careful. But what it does is it gives you 3 times what the utility average is. So on the way up, you see where this went from 65 to 75? Look what it did on the UTSL. That thing went from 33 to 48. That's a lot more, right? So we have to take what that's called beta. You got to take that into consideration on your sizing, because the loss is going to be 3 times. And you base sizing based off how much you can lose, not how much you can win. So if I'm only willing to lose, let's say I'm only willing to lose $500 on a trade, and my stop is right here. Well, I mean, you can do basic math. That's 35, right? So if it falls to there, I'm getting 3,500. If I can only lose 500, it means the largest trade I can take is 4,000, right? And so I would buy $4,000 worth, whatever that is, and I know I'm willing to take a $500 loss. If we're running that, but you got to remember this is 3x, right? So you want to make that determination on the XLU. So you'd come over here to the XLU and you'd say, okay, I can only do $4,000. And let's say you're doing that on the XLU. Well, when you go to the UTSL, you got a decision to make. You technically, if you're going to stay within some parameters of position sizing, you would never take the same size, unless the reason you're doing that is to get juice. Like the goal of doing a 3x is to get juice. So I'm going to take a normal size trade. Like for instance, say I was going to buy 100 shares of this. That'd be 7,200. Well, if I put 7,200 into the UTSL, it's going to give me what? 150, 160 shares. Well, 160 shares that hits $36, you're not losing $500, right? You're losing a lot more. So the way I would make all of this determination is on how much I'm willing to lose. That's usually your position sizing in trading. It's not an even, like I need to buy 100 shares. And then you're usually basing that off of the balance of the account. So let's say you got $10,000 you're trading and I'm willing to lose $500 on a trade. Well, I can back that number out and determine how much I should buy. So if I'm buying the XLU, let's say I don't want the leverage, I'm just trading for fun. Well, if it's, I got $4,000 to invest, that's what we've been saying. Let me keep that little theme going. So if I got $4,000 divided by what, 72, that means I'm getting 55 shares. So if I've got 55 shares and my stop is here, let's say 69, we'll say $69, keep the math simple. When I'm buying this now, let's say I'm buying this at 72, that means it's $4,000 worth, right? That's what we said. So now 55, let's do times 69. That's 3,795, right? So that means I'm losing 205. Well, you said you could lose 500 a trade, so you could actually take this up. You could buy more than that, right? You could take it up to 6,000 or 7,000. But you get to the XLU, you got to remember that 3x. You got to ask yourself, am I buying this to truly 3x my position size? Because it also is going to hit your loss. Meaning, so you saw how little that loss is, but when you put this same trade on the XLU or UTSL, excuse me, when it falls to here, man, I mean, that's a big ass fall, dude. That's that's 10%, man. So, and it's not 10% on the XLU, you know, it's a tiny loss. So keep that in mind and ask yourself, am I leveraging up to take bigger trades, which means you're taking on bigger risk, which means you can have bigger losses? Or are you just doing it to spread your money around? So maybe I would take the same size of this that I would take. Maybe I downsize it even more. If I normally take a 4,000, maybe on this I just take 1,500. But that allows me to take 3 or 4 other trades. So I use the leverage as a way of spreading my money. Yeah, I'm taking on more risk, but I'm buying a smaller amount. Does that make sense? So like maybe I'm only buying 50 shares of this. Well, 50 shares is giving you the equivalent, you know, so what would that be, $2,000? Well, it's giving you the equivalent of 6,000 in the XLU. So a lot of ways to look at it. There's no right or wrong. You just got to ask yourself, why are you doing it? I'm usually doing it to get juice. I mean, I want to bump the trade. And then I just got to look at what am I willing to take, what kind of hit am I willing to take on it. Now, this one, to be honest, I hold this. I hold about half of this riding this shit up and down because I like to trade this thing. So I'm a big fan of this ETN. There's a whole lot about the UTSL. We'll see. We'll see what the market does. But I do like the fact that it's going up, man. Be careful on your sizing. Play with it. You know, do $1,000 and play with it. And then say, well, if I would have bought 1,000 of the UTSL, it would have went up this much. I did 1,000 on this. It went up this much, or it went down that much. So just keep in mind the losses can be massive in triple leverage funds. I'm long the TQ right now. I ride it up and down with the stock market. So it's at 28. It was at 90. You know, this thing can be brutal, man. So, and down we go right now. Woo! It's picking up steam too, man. All right. Looks like we got a bona fide sell-off. Where's the VIX? The VIX ain't popping. Huh. Bonds are moving though, but not much. A little bit. All right, man. That's all I got today, man. We got some good stuff going down. It's definitely a great opportunity. I was hoping that stage 1 would hold. So far it is, but man, it looks like it's picking up steam, so we may blow right through it. We may blow right through it.